Okay, 3, 2, 1. Right, so we're recording. So an inside day. An inside day is a day that closes without taking out the prior day's high or low. So as you can see, this week, Monday, the opening range of the week, we got an inside day close. Okay, there's Friday's high, there's Friday's low, and this day closed inside of the high and low without taking out the high or low. It just ranged sideways. Okay, inside day. When we have that in our next trading day, so when we come in on Tuesday, Asia over here, the Trend Predator Pro signals that the previous day closed IS, yellow for neutral, right, inside. So what I need to do when I come in each day, what I tend to look for are signal days. And one of the signal days I look for is an IS. Okay, IS. Now, these conditions, so a condition such as an IS inside, doesn't just have to apply to an inside day. It can also be on a week. If we look at the euro, I've been tracking the inside week for quite some time. Well, throughout all of 2 weeks ago and all of this week. So if you look at the weekly chart, here's the inside week. It's a week that did not take out rather the high or the low of the previous week. It's an inside week. Okay, and the chart, if we go back to the following Monday, the indicator will pick up on that IS inside. It also picked up that the prior day, Friday, was an inside day. And let's see what happened to that inside day. I don't recall what happened, so I'm doing this blind. So we took out the low. Now, markets do one of three things. They break out of a level, of a multi-time frame level, be it a 1 minute candle high or low, be it a 5 minute candle high or low. Okay, that's a range, be it a 1 hour range, a 4 hour range, a daily range. And in this case, the market's breaking out of a daily range, of the day's low. Now, markets do one of three things. They break out and pull back and continue. In this case, bearish below the low. I've done that too high there, the low of the prior day. So break out, pull back and continue. Or the market will break out, pull back and fail. And if so, if it fails to continue broken out and moves back inside of the low of the previous day, the breakout level, we assume therefore, if we are above that level, that until we move back below it, that we stay above it and we continue to the other side of the range. And that would be a failed breakout, aka a fake out low, FOL. Okay, or what markets do is they range, such as what they did on Monday. They don't go anywhere. Okay, they just move inside. All right, so these are the three things markets do. Very simple, but once you start building the building blocks for your strategy, that's a very important factor. Okay, markets only do one of three things. Therefore, when we break the low of the inside day, we know that if we stay below that inside day low, there's a strong likelihood that we will continue in the direction of the breakdown. And therefore, we can align ourselves below the inside day low, preferably from the level, if we get a pullback, to go short, depending on the behavior of price. And what do I mean by the behavior of price? Well, I have a indicator called the trend predator fake out highlighter, and based on the same principle that markets do one of three things, we can look for breakout bars. In this case, we're looking for breakdown bars, bearish. We're looking for fake out high bars. So a fake out high, a failed breakout to the upside that comes back inside would be bearish. So look, here's a fake out high counter close bar. So this is the sort of price action that we want to see on the other side of the range. If we're looking, if we're below that low, we're looking for either bullish price action so that we can trade on the inside of the low higher, or bearish price action so that we can trade bearishly on the outside of the bar in expectation of a continuation to the downside. Okay, this is why these are signal days, because it gives us a basis, a foundation. There are three things that we know when we come into trade on our current day. I mean, if you're in Asia, I mean, there are three things. There are the high of the previous day, the low, and the closing price. If you're in London, you gather a bit more information because you've got the previous day's high and low and closing price, and you've also got Asia's high and low, and so on. So when you come to New York, we've got a lot of information to work from because we've got London's high and low, Asia's high and low, okay, and we've got the closing price from yesterday and the high and low. But typically speaking, just narrowing it down to whatever session you're trading, you've got yesterday's high and low and closing price as information that's non-arguable to work from. No matter what broker you're with, it might be at different prices, but you've got a high and low and a closing price that your broker is showing you. And you can work from that. Does that all make sense? Now, the theory behind inside days, here is an inside day, is that if you imagine it, it's a battle between the bulls and the bears, okay? The price is being agreed and there's no breakout. What I'm looking to trade is I don't want to trade inside, which is not to say that you can't benefit from a strategy that can trade inside, such as our friend here today did on gold, trading on the inside. But for me, I'm looking for a market that's out of balance, and that's where you get the volatility generally, and that's where you're going to get the trading opportunities. So when a market is in balance, like an inside day, we know for certainty that there are stops above, be it breakout buyers or be it sellers that need to buy back at a loss. Okay, and that is an area whereby if the price comes up into, then we expect activity. Okay, now in this case, we've got stops above and stops below. It's an inside day, so we anticipate there to be order flow on the back of coming into this area, either bullish or bearish. It would be unlikely, not to say that it won't, but it would be unlikely that the price comes into this area and just goes sideways for the rest of the day and does nothing. Okay, it would be unlikely that the price does that. Okay, it would be more likely that the price will either continue to stay outside of that low, expanding the range of the box, or it will come back up inside of the range. And once we get into the value area of the range, so here's the value area low, which is where the price was traded mostly in between that value area low and high. over here, the grey dotted lines from the prior day. I'm drawing them solid lines for our current day. The theory is once we get into the value area, depending on how the price behaves, if it enters aggressively and holds firm with lots of bullish commitment, you'd anticipate it going to the other side of the range. And given that it's an inside day, where's the liquidity? Up on the other side. So the thesis is that we come back up to the other side. If we can't stay broken down out of the lows, the theory is that we come up to the other side of the range for the stops, liquidity. And there lies our strategy within that logic. So, inside days. Now let's see what happens over here. This is the euro. And we're talking about, look how, if you're trading that euro, you're breaking down the inside day lows. Okay, you're rolling up your sleeves now and you're monitoring the behavior of price. Now, I trade the Wall Street opening range. Okay, I have a breakout strategy whereby when we come into Wall Street, 9:30. Okay, we're going to build a box between 9:30 and 10 a.m. This is why my chart made that box automatically, because I've got an indicator that does it for me. And we get a high and a low. And what I'm doing is I'm leaning on the thesis that we've broken down the inside day lows. So that's bearish. Okay, while we're below it. Now, if we come back up into the inside day lows and we start seeing selling activity, which is what we saw here, okay, we get a fake out high of that initial 15-minute open of Wall Street, 9:45 close, okay, and the open 9:45 took out the high, fake out high when it comes back inside. So that's bearish. This is a bearish candle. That's bearish price action. Bearish price action below the inside day lows. So this is a switch bar bearish. Now, not only that, it was a fake out high. Let me just get rid of that. It will give us a fake out high. It was a fake out high counter close bar, right? So that's really nice. So if I'm bearish already because I'm below the the inside day highs, lows, sorry, losing my train of thought. Because I'm below that inside day low, I know that there's activity going on here. And now who is going to take control? Bears or bulls, right? So we get a stop hunt into the breakdown. And then we get bears in control at the highest volume point of the day, which is the Wall Street Open, generally speaking. Okay, in a highly probable section of the chart where we're going to see price action and follow through. And that's exactly what we got. So if I'm a intraday trader and I'm not greedy, I can trade that breakout of the opening range low. So very similar to an inside day, right? High and a low. Breakout, we expect to the upside. Continuations. If we get a breakdown, we expect the continuation to the downside. It's not to say it can't break down and pull back inside, and that's another subject altogether. But similar to the inside day, if it were to do that, then I'd be looking for longs in anticipation of it traveling to the other side of the high, because that's where the stops are. Right, so there's our entry. Now, importantly at this point, let's go to a 5-minute chart. I'm trading on a 5-minute chart generally, off a 5-minute chart. And I'm trading that breakout. I want to be below that, probably below that low, being the low of London, right? Just for confirmation, and I'm just taking it off the cuff. right? As soon as we get below there, if I'm on a 3 minute or a 1 minute, we might get some hesitation in around here. Yeah. So as we break through that wick, we're in. All right. We've got a stop above the low of the Wall Street low, above the low of the Wall Street range, opening range. And we can target a 100% range expansion. And if we've done that, we're not getting very much value for our buck, are we? Unless you're being really aggressive with your stop loss and you've got a 3-to-1 within a few minutes. And you could have your stop loss that aggressive, in fact, because we've taken out that wick. Okay, so, but you've got to be pretty sharp to have been on that. Otherwise, we're going for a 200% range expansion if we're trying to get at least 3-to-1. 200% range expansion of what range? The Wall Street opening range. Okay. And that's what we got. So a nice 3.7R in the matter of 10:30, 30 minutes. Okay. And at that point, what I advocate is shutting down your screens and going on a bike ride. Take the dog for a walk, do the dishes, come back tomorrow, right? Save your capital, save your mental capital. Do not give your money back to the market. Trade your strategy, execute your plan, and walk away. Close down your laptop and come back the next day or the next session. Quite often, if I've had a decent setup looking like for Asia, I'll come back and trade at night time, which is around about 7:30 p.m. my time. If I'm not playing football or something in the evening, then I'm more than likely to be here at my charts. So I can trade, but I'm not looking to trade 2, 3, 4 multiple times, multiple assets, trying to be the best trader in the world. No, all I need is 3R a couple of times a week, maybe a loss along the way. That's fine, and I'm doing pretty well. Okay, and this strategy will give you a consistently profitable outcome so long as you trade it properly. It all comes down to you as the trader, the behavior of the trader. You can have the rules written down for you, and even I, that have been doing this for a long time, I will break that rule from time to time through stupidity, through lack of concentration, through being distracted, just not being on point. I'm a human being, not a robot, but you've got the rules, and doing it in real time is a completely different matter. But as you can see, it's a systematic approach, right? There is a methodology to this, and it's combining momentum and trend factors in the market. So what have we got here? We've got an inside day. The thesis is, so long as we stay on the outside of the inside day low that we've broken down, we're going to continue down. Then we're monitoring for how does the price behave at a certain time of the day. I advocate doing this either in Tokyo, London, or New York. The opening range of the equities. So for me, if I was in London, I'd be trading the FTSE Open at 3 a.m. New York, 8 a.m. London. That range, the opening range, will be 8 until 8:30, a 30-minute opening range. Okay, this is not a new system. The opening range breakout strategy is something that's been around since markets began. Okay, some people will use a 15-minute breakout. Others will use a 5. Others will use 30 minutes. I use 30 minutes because what that tends to give us is the market trapping both ways, both trapping traders long and short, or one way or the other, and we're trying to trade against the trap. In this case, the trap was going long. Okay, so you've got the breakout that occurred, and then support, and then you've got traders that are thinking, right, well, that's the low of the day. I'm going to buy it in the Wall Street Open. Lo and behold, it takes you up before bigger orders bigger sell limit orders are here, not aggressive like traders buying at market, but you'll have orders below that low to sell. Okay, so the market's broken down. This has triggered algos, hedge funds, whatever it might be, but there's large money sitting up here waiting to sell. If it can't get filled at their order, it will be the next best price lower down as it starts to move away. However that works, but that there is a trap going long, and it doesn't look back, and that's what we're trying to trade each and every day when we come into our screens. Parabolic trades such as this. Okay. Any questions? I've done a fair bit of talking there without a pause. I'm just reading. Learn a lot of information today, Ross. Thank you. I did a gold trade inside day. I got it. Great. And now break the yesterday high, and now I'm waiting for your levels for tomorrow. I'm closing now because my other way going to start. Okay. Does anyone have any questions about this? So basically, inside days, at the end of the day, check your charts, or before when you come in to your trading day, look at yesterday. How did it close? If it was an inside day, great, you've got a signal day and a potential trade setup. Okay, this is not about just trying to catch moves, or I think it's going higher, I think it's going lower. This is about structured markets and rinse and repeat behavior that we can come accustomed to and build a strategy around and benefit from, right? So we know that inside days, if they've broken down and don't come back inside of the low of the breakdown, so the breakdown is the low of that day, if it stays below it and the candles are bearish at certain times of the day, that will indicate that the market is going to continue with the trend. Okay, let's have a look at a scenario now where the market doesn't continue with the breakdown of the low, but what it does instead is it breaks the low, and then what do markets do? Three things that they do. They break out, pull back, and continue, or they break out, pull back, and reverse. And then we look to trade to the other side of the inside day. And we're going to look at an example of that in a minute. And here we could have done that if the price had come back inside of the low. You can take it from the low. Some that are really good at this will even anticipate the break back inside from the price action that's below it. So peak formation low, W formation, whatever it might be their catalyst to assume that the market isn't going to continue lower, and they will take it from the outside of the low and take it all the way back up to the other side. I'm more conservative, and I wait for a minimum of the low to be broken and the price to be showing bullish structure on the inside of the range. And if I'm even more conservative, I'll wait for the price to actually get up into the value area of the previous day, and I'll take it from up in there. And that's all right. I mean, I can still bring my stop up, and it can still be as lucrative, depending on how the structure is by the time I look to enter the trade. So let's have a look at one of those. Any questions, fire them through. Let's have a look at the US 500. Okay, so this is something I pointed out yesterday. We were in the wrong place in the chart. I was wondering what on earth was going on there. Right, so Monday was an inside day. Okay, an inside day. So we'll just mark that as an inside day. We'll box it off, inside day. And give it a yellow color for being neutral. So what do? When we come into our screens, whether you be in Asia, London, or New York, you look at how did yesterday close. You look on the chart. I've got an indicator here that shows me. We'll get into that at the end, and I'll explain. This is like the icing on the cake when it comes to this strategy. So there's the inside day, and what do we do? Three things that markets do: they break out. Well, they range. They could just range, and it could stay inside. That does happen from time to time. And that's also as powerful because when you've got a market that's coiling like that, so let's say this was a day that didn't break the high or low of that inside day, and there's another inside day by the time we come into Wednesday, over here somewhere. Then we've got two inside days. And when the market's coiling like this, you can expect there to be even bigger moves. Okay, so that's equally as powerful. All right. So there's three things that markets do. It can range, as this example, or it can break out. Okay, so we'll give that a red color for breaking out of the low of the inside day. They will eventually, at some point, pull back and either continue. One of the three things markets do: break out, pull back, and continue. Break out, pull back, and fail, and go to the other side of the range. In that case, we've got a bullish setup. Okay, so they either coil, break down, and continue, or break down and then pull back and go to the other side of the range, right? So nice and easy. And then what we're looking for is an entry. And in this case, we'll just monitor what the price did. Go to a 50-minute chart. Speed it up a bit. Okay, so as you can see, what's the market doing? Broken out, pulled back, and what's it doing? Failed. And what has it done? Gone to the other side of the range. All right? And we knew that. We knew that markets do one of three things, and that's one of the three things that it does. So therefore, we can take that in the assumption that it's going to go to the other side of the range, and that is your trade. Right? Now, for me, I was playing around with this. I can't remember if I did the. Yes, I did. I tried. No, I actually played it with. And I actually came. I made a bit of profit and a break even on my other trade. Now, for me, what I generally prefer is to get off the screen. Right, I don't want to be trading the afternoon. Generally speaking, the majority of the volume is traded around the Wall Street Open. Okay, when you're trading in New York, and that for me takes me up to around about lunchtime. So if there's activity, or if we're not, if something hasn't come to fruition by lunchtime, I'm generally cutting my trade either in profit or at break even, or I might, if I've got an inkling that it's going to go, I might put in a stop loss and trail it, and then just turn off my screens and leave it. But generally speaking, I just want to be off my screens. Now, um, this wasn't going anywhere for me. Um, I'd taken the trade on the breakout. In fact, full disclosure, I actually made a mistake. My first trade that actually gave me a profit, I got in too early. I'm only human, and I got in against my rules. I could have held it, and if I had, well, typically, I mean, this happens not all the time, but it happens frequently. You know, you get out of the market, and then it goes the way that you thought it was going to go, and you hate yourself forever for getting in the way of your own trade plan. And but for me, I've got rules, and in this case, I got in on the wrong candle, um, and I got out because I envisaged the pullback, which we did get a pullback, but I didn't want to be under heat. Anyway, so I tried again, and then I came out at break even because I wasn't prepared to sit through chop and for the afternoon. But lo and behold, it then rallied. So there we are. Anyway, but I just want to showcase the power of this strategy. So you might be thinking, well, Ross, if you know it's going to go to the other side, why did you get out the trade? Well, as I said, I've got rules, and I want to see this happen during my timing window. Okay. Otherwise, I'm taking trades outside of my window. And once you get into the habit of doing that, you will get yourself into a mess. And that's where our psychology and behavior of trader must be a factor in your trading um, ethos, because we are human beings at the end of the day. And if you want to familiarize yourself with price activity and habits of the market, well, for me, it's my opinion, at certain times of the day, and become a master of that time of day. It's not to say that you can't see moves. I mean, obviously you can see moves at other times of the day, such as what we saw over here. But generally speaking, you're going to get that during the higher volume period of the day, which is usually around the Wall Street Open. Yes, you do get trades in the afternoon. Yes, did I kick myself for not holding on to that position? Yes, I did. But so be it. It's just one trade, one missed opportunity, and there's many, hopefully, many more days ahead of me to be able to enjoy trading, right? So now, so that's that one. On the US 100, US 100, same scenario. Inside day, markets break out, they pull back, and they'll either continue, which it didn't, or it will fail. So by the time it came into my New York Open, what was it doing? It was failing. It was already in the process of failing. So it was just a matter of aligning myself with the momentum in the market and the thesis that we're coming to the other side of the inside day. We came to the other side of the inside day, and look what happened. It stalled right there, right into our target. That's not a coincidence. That's the inside day. That's the characteristics of an inside day. And we're targeting that area. Okay. So any questions? It's all quite a pretty simple strategy, which is great because we want to keep simple trading as simple as possible. So we can just come in, concentrate on what we need to do, and execute flawlessly. Rinse and repeat trade setups and strategies. And then what we can do is we just look at today, right? So this is an example of an inside day that essentially plays out on the day, right? So Monday was an inside day. Tuesday, you've got the signal day, and the trade plays out on the same day. Now, sometimes an inside day could take several days before the price eventually gets to the other side of the range. And let's look at the US 30. I've actually got a trade on in the US 30. And on Monday, just like with the US 100 and 500, there was an inside day. The next day, broke down, pulled back, okay, and then failed. So broke out, pulled back, failed. Now, let me get into this properly. Just give you an example of what's going on here. Right. So when we come into my trading timing window, which why isn't that coming up? There it is. Right. So there was nothing that for me to have done at this point. Right. So I can't remember why I didn't take the. No, I did. Sorry, I'm thinking out loud here. I took the US 500, but I also, yes, okay. So then later on in the day, now I didn't do this on my live account, but I've done it on my live account today. But yesterday, I was just trying to showcase this situation. So um, inside day yesterday, and the US 30, for whatever reason, I don't know the fundamentals behind it, it wasn't playing out as firmly as the US 500 and US 100 did. By this point in the day, we'd already come up to the other side of the inside day on the US 500 and 100, and the US 30 was lagging behind, right? But what I was trying to emphasize is that's not to say that it's not going to go up to the other side of the range at some point, and it may well do it in Asia. So what I did is I put a late afternoon trade on just to showcase the prospects of that, and I did it as we broke out of the high um, of the Wall Street range, and I might have got in somewhere around here. I can't quite remember. Right, but here we've got a breakout of the range situation. We're above the EMAs, the VWAPs. We're inside of the inside day low as well as the value area low. So the thesis is that this, like the US 100 and 500, will eventually go up to the other side of the range. Even though it's very late in the day, you can still put a position on and you can swing trade it. You can run it overnight with a stop well away, right? Your break even point, however you want to manage that trade situation. And then you're being patient. Now, I came in today, I took the trade off because I knew, well, I didn't know anything, but I knew that I'd have an opportunity to put the trade on again if indeed I get confirmation that that we have a setup that is going to stay going long in the US session. I mean, it could have easily just fizzled out, and had I left the position on, stopped me out before. It could have happened during the Wall Street Open and then gone, which is essentially what the market's done. I mean, my stop was lower down, but this is exactly what it did, didn't it? It faked out low, right, and then rallied. Okay, um, so at this point we had this high of the day, and then it made a low of the day and broke through the high of the day. So at this point, we're thinking, well, this is all very bullish, isn't it? In line with our thesis that we're coming up to the other side of the inside days range. We've already taken the low. It's failing in the process of failing. So that's our conviction to take the trade long. I actually took this inside of the range above the VWAP, and I think I took it at 10:05, 10:15. We'll look in a minute. Um, and I've just been caught sideways all day long. Now, I was actually wondering whether, just to cut this, thinking, well, this isn't going anywhere. But then I was looking also around, I'm looking at the Dixie. I was noting that Dixie was selling off, and actually, it's quite surprising that the US 30 still hasn't rallied. I mean, that's a strong bearish move in the US dollar. The US 500, um, has done its thing. It's come up to a 100% range expansion of that range. The US, what is all-time highs, I think. The US 100. I mean, we are expecting some earnings, which could be, but I don't know why it would affect the US 30. It's more of a US 500 scenario, but in any case, the US 500 has been really, really sticky. It was the laggard yesterday. It's the laggard again today, and it's just not going anywhere. So, a bit frustrating. But as you can see, what's the bias? The bias is bullish based on the inside day highs that we're targeting. And while we're up there, I'm thinking, well, we might as well aim for the previous week's high. We're so close to it. You'd think that might might make it all the way up there, right? Um, so that's it. That's it. Now that's the logic behind the inside days. Okay, it can take a couple of days to play out, like we're seeing on the US 30. It may or may not play out. Hey, there's no guarantee. I mean, I'm not suggesting for a moment that this works all of the time. But so long as you're trading with asymmetrical risk to reward, so a minimum of 3-to-1, 2-to-1, the times that it doesn't work out, let's say it's a 50% win rate. Okay, the times that it doesn't work out, you're risking minimal. What depending on how you want to approach your risk management. Um, but if you just say risking 0.5% on a trade, okay, and it's a 50% win rate, all right, the times that, that it's losing is going to be made up for the times that you win. If you're targeting 2, 3, 4, 5, 6 times your money, losing a couple of times isn't really a big deal, is it? So go back and back test this. Now, also to add conviction to these setups is that we're combining not only a signal day, not only the momentum around high volume impact areas of the day, trading the breakout or the candlestick behavior in and around the Wall Street Open, bullish, in this case, bullish candlestick behavior. So I'm taking it from the inside, and I haven't waited for the breakout. But when you can combine it with the Trend Predator Pro, that actually even gives you a signal, in this case is a 2-star quality uptrend signal, then you've got a lot of confluences there for a powerful trading system. So that's it in a nutshell. So any questions? If this is of interest, then there is a couple of videos further on this in the Trend Predator channel. What I'll do is I'll finish it off so that you've got my full strategy, and I'll even give you the template of this. What I'm doing is I'm using the opening range, and I'm also combining it with an EMA ribbon. Where's the EMA ribbon? It's an indicator. Where is that? Bear with me. MA ribbon. Okay. And I've got it set to EMAs, the 20, 50, 100, 200. I've got them color coded to how I want to see them on my chart. And as you can see, when I'm getting into this position here at 10:15, the close of that candle, what we've done is we've faked out low of the New York VWAP. I've set it from 9:30 a.m. So it will track the price from 9:30 a.m. onwards for the rest of the day. Bullish above, bearish below. Essentially, what the thesis is that you'll have orders placed with dealers, be it pension funds or whatever it is, and they want an average fill of the better than the VWAP for the day, right? So they will have very large amounts of money to do. So each time the VWAP, the price is above the VWAP at certain times of the day, perhaps, depending on the dealer, how they're going to iceberg the trade out. But the price can come below the VWAP, and that's a bargain, right? And there you see the price shooting up. You got potentially limit orders down here. So buy below the VWAP at a discount. So that's the thesis. So if the price is riding that VWAP, then that's bullish, isn't it? Okay, so if you've got a fake out low, with this candle here, took out the low of the previous candle, closed inside, that there is bullish. This here was bearish. This here was neither here or there. And then we've got this nice momentum candle breaking out of that high, coupled with this fake out low. So at the timings, at a new 15-minute rotation, a new candle, then the thesis is that this is going to continue higher. All right, so that's why I'm getting in at that point there. And all it did really is just move sideways, right? So not the best entry, not proud of it, but had it gone, then fantastic. And then I'm also adding to my position on the breakout, right, of the high. But in this case, it's just gone sideways for the entire day, which I've scratching my head really. Okay, so not sure what's going on with that. But anyway, so I'm using the VWAP, and then I'm also using these ribbons, the EMA ribbons. So we're above the 20s, you can see there. It's a 20 EMA on the 5 minute. And then you've got several other, I've got the London VWAP, the Asian VWAP. All right, so we're above the Asian and London session VWAPs as well, bullish, above the ribbon. So this is all looking quite bullish, as signified by the Trend Predator Pro, and it's beyond me why this hasn't gone off. Don't know why. Any questions with regards to the setup? There are price action patterns also that I monitor for. So in this scenario, I was also noting on the 15-minute chart that we had a potential of an ABC. So A, B, C leg. So I'm buying the C leg. Impulse correction continuation. Markets do one of three things. They break out, so there's the range, breaking out the London high, break out, pull back to the London high, and assuming that it stays above that London high and starts continuing, you assume that it's going to continue, right? Breakout, pullback, continuation, A, B, C. But today it's just gone A, B, C, D, E, F, G all the way to Z and not doing anything. But there we are. Can't win them all. But I'll hold on to it. You know, we might get a late day flurry like we did yesterday. I think yesterday the price rallied. It was 2 p.m. New York or thereabouts. Yeah. So maybe we'll get the same again today. Maybe we won't, and I'll get stopped out. I've only put a fraction of what I'm prepared to risk on this entire trade anyway. So it's very much a starting position. If I get stopped out, it's not breaking the bank. But if we get confirmation that it's going, then I'll add with size, which will give me a better outcome if it goes my way. All right. So yeah, there are various patterns that you can look at. I've got an entire playbook based not on inside days, but the opening range, the opening range strategy combined with the Trend Predator Pro. So all I've done is I've overlaid this strategy, the opening range breakout strategy, using the Trend Predator Pro, backed up by a signal day. Okay, so it's just a extra layer of conviction using the signal day. But there's a playbook for free. It's there in the Trend Predator channel, and it will show you the variations of these types of candlestick patterns of behaviors. We can use a 1, 2, 3, 4, 5 scenario as well, which is what might be playing out here. All right, this could be the fifth wave that's about to play out, right, through the range. There are variations of candlestick patterns that I look for, behaviors of price around the open for which I trade. All right, so the playbook is there. Go and get it, have a look at it. It's slides and videos explaining the setups. And then when you combine it with the thesis that markets do one of three things, that they break out, pull back, and continue, or break out, pull back, and fail in this case, and go to the other side, then that's, at the end of the day, a powerful strategy. So any questions as I wrap up? Any feedback at all from anyone? Otherwise, we'll call it a day. And I assume that everything's clipped for you all, and you're all going to go away and hopefully apply it and do well with it. So thank you very much for being here, and I'll see you in the Ask Our Analysts channel. Have a nice afternoon, morning, night, wherever you are in the world. Any questions, don't hesitate to ask.